All right. Good morning, everyone, and welcome back to the UK Live. And wish you all a very blessed and great New Year. Let's make 2018 one to remember when we are meeting, when we shall meet on the 1st of January 2019. So stay with me for the next 12 months and let's trade systematically starting today. Also producing a report card for us all to see by the end of this year. All right, let's get started off. Just a small announcement. I'll be beginning to add on one service which is in a different language, that is a Hindi local language, where I'll be preparing a few videos and I'll create a new playlist so that it's not mixing with the regular sessions. You can especially for those who are wanting to trade local stocks and Nifty. All right, and the other service would be in the Telegram, where there would be some kind of a running or a regular commentary in terms of label charts being sent uh, at least 5 times a day. All right, that would be beginning maybe. I'm planning on 4th of January. We'll start with that. All right, I'm not creating a new channel for the Hindi version for now, but if it requires, we'll do so. Otherwise, the channel is remaining the same, but I'll put up a new Telegram for the Hindi version video so that it doesn't mix up and it's easy to navigate in the existing videos as well. All right, so that was a small announcement, and let's get started off. Thank you again for all your kind support on spreading the word on the YouTube channel. Quite a few subscribers have added to our family. Welcome to them all. Dion, I'll be sending across your file today if you are listening to me here right now live. All right, so let's get started off. We will touch base with all the instruments that we've traded last year as well, beginning with the Euro USD. Let's do some simple wave counts. This session might extend by about 5 minutes or so. I actually wanted to send individual videos as well, so and I would do that as well in the next 2 days or so. And you will like the chart commentary with proper label chart sent out at least 5 times a day. All right, let's find out. I'm not drawing a higher degree actually. This could be wave 4, okay, or I would say I would still give a chance to A. If this is wave 4, then there is wave 5 underway, which will print one more high above the 2092 levels. It should be going gradually. It's not going straight from here. All right, please remember we are already sold Euro USD from an average price of around 2010. All right, and with a stop just above the 2092 resistance, that 2100, that's our stop loss. Now counts are suggesting either it's going to form a new high, but the pattern will be like this, or should be like this. There is a new high already formed, so there should be some break somewhere here, and if it bounces back again, then there would be a new high. We will take a call around the 1850 mark. If it is not wanting to form a new high, then it would continue dropping lower straight from here, and a break below 1.17 would confirm that. In that case, we would already be short, and prices should extend at least towards the 1.14 levels. Right. Either it's making 5 waves ending diagonal, out of which it has made 1, 2, 3. It could be wave 4 and wave 5, or it is 3, 3 and 5 wave structure in the making. The subset, as we normally trade, the subset is to drop from here. Bears should take control at least towards the 1850 1900 handle, so I think we should be safe to remain short with a stop just above previous highs 1.2092. This was expected last week of December. We discussed this and that has been achieved. Please remember, we are just beginning the new series 2nd of January today, and a bearish kind of reversal day today would confirm that the rest of the series is on the south side. Kindly watch out for that. Okay, let's start off with, let me cancel this McAfee. Okay. Dollar index, no different from what we discussed the euro right now. Could be waves displayed as 1, 2, 3, 4, or A, I would say. And if it is 4, then wave 5 will push prices lower. Again, the story should unfold into 5 waves. Right now it has unfolded into 3 waves, that is wave 1, wave 2 and wave 3. Ideally there should be a wave 4 somewhere towards or into the 93 handle, and then wave 5 lower. Alright, if it is not producing the 5th wave lower, and if it's producing a complex wave 4 or a deeper wave 4, then we are slated to an extended rally towards at least 96.5 levels. In that case, the 4th wave would go a bit more deeper. It could be going towards 98 levels as well, that we were anticipating last year. Kindly remain long. For now we are long 50% around 90 to 25. Remaining, if prices manage to drop towards 91.80, the remaining longs will be taken there. Stop loss goes just below the 91.17 mark at 91. And the take profits for now is the anticipated wave 4 at a lower degree towards the 93 mark. We will take a call around the 93 mark whether we want to remain long or we want to take profits. We'll take at least 50% profits around that price. Looking into the bigger picture, there is a good possibility, in fact a very good possibility. There is time for it to materialize, but it could be a complex correction wave 4 ending around the 91 mark. 3, 3 and 5 consolidation. It's too early to confirm that, but if it is, then the next leg could take the dollar index above 103.80 as well. What we are expecting for now is maybe towards a resistance mark there around the 100 levels, or just above the 98, 99 levels. Alright, we will try to pick up on the long side. We already picked up the remaining 50% around 91.80 if prices drop through that level. Alright, pound is testing 3550 handle. Ideally, I would like to take you on the weekly chart to show up a higher degree wave count. A 5-wave drop was expected from 1.17, which has unfolded into waves 1, 2, and then lower degree 1, 2, 3, 4, and 5. As the third wave, now that is a potential wave 4, which has terminated right within the vicinity of the previous wave 4, and that's why the 56 the 3650 handle should maintain resistance, and prices should ideally remain below 3650 levels. All right, now if that is correct, then we are going to witness 5 waves lower from the 3650 handle. There's wave 1, wave 2, wave 3 should be under way almost towards not 2000 actually, but it would go sequentially 1.28 1.26, sorry, 8 and 6, and then lower. If you look at the Fibonacci ratios, the third wave is expected to terminate somewhere around the 1.2 handle. There you are. If you see the 161.8% termination is the third wave, which is expected to drop all the way towards 1.2 from here. That is almost a 1500 pips drop with a risk of about 100, not even 150 pips. The risk stays at about 125 points from here. 3650 should be your stop loss, 3660 let's say, and the third wave is expected to terminate around the 1.2 handle. Watch out for this wave. These are good ideal trends that are expected to develop in the first 1 or 2 quarters of 2018. That's why I'm spending more time, and I will also send across the different time frames charting when we start the commentary on 4th of January, that you have the bigger picture in mind, and then we'll play out on the smaller waves. All right. Next is the metal. Let's spend a couple of minutes here as well. First things first, wave structure still remains incomplete on the lower side. That you cannot claim. And first of all, there was 5 waves drop here, which I'm going to label as A, and then we were expecting B here, but which is absolutely not the case. Now it's an expanded flat already. How that expanded flat unfolded, this is difficult for a trader to pick up, and that's where we fail actually. We should have been able to pick up it was a bit delayed or late when it came to my mind that it could be forming an expanded flat, but that is what it has formed. must be thinking why this ABC. Okay, let me show to you. If you look at 2015 and onwards, all right, it has been an ABC series all the way. That was A, B and C, the first leg, A, B and C, the second leg, A, B and C, the third leg. That's what we're anticipating. A, B and C, wave 4 or leg number 4, and then the fifth leg to complete a potential or a valid triangle structure, right, before it drops lower. Now the case is going to be invalidated above on a break above 1357. It's too far right now, but this is an incomplete wave structure. B has taken shape of an expanded flat, nothing else. Take a Fibonacci retracement of the entire drop, you will be seeing that it's hovering around the 61.8 mark right now. So how are we going to handle it? We'll allow a few hours to produce for the chart to produce a bearish candlestick pattern first of all, and then very conservative traders would also allow a break below 1301. See the 61.8% around 1311. We should expect a reversal from there. Second is we'll allow prices to break below, let's take on a smaller time frame, break below immediate support at 13.1. Once it breaks below that, you can fearlessly go and sell the consecutive rallies, but that rally would be around 1306, 1307. Two ways to enter. Right now we are watching. The moment we see a bearish candlestick forming here, we'll issue a sell call. Alright, that's an aggressive way to deal, and the conservative way to deal would be to allow prices to break below 13.1 and then go and sell. Alright, we are still looking for this wave count to get complete. 61.8% has already been met of the entire drop, or it might extend towards the wave 4. Previous wave 4 vicinity is also coming at 1313, I suppose. Not too far at all from here. Alright brothers, so we are watching to sell gold, ditto with silver. I will be touching crude oil right now because we are already into a trade there. Crude oil again has done nothing wrong except a slight new high, which was the fifth of the fifth wave. In anticipation, everything was being anticipated. That's just one small leg. Nothing wrong in that. We will remain short. If you are wanting to take positions now, you can still take, but watch out for 54, 55 levels in the next drop. The fifth of fifth wave looks to be complete. 1, 2, 3, 4, 5. It's already complete. Alright, so, and the same structure on a weekly chart. Crude oil is forming a wave 4 of a higher degree, just in the vicinity of the fourth wave of one lower degree. Okay, so that was the wave 4 of a lower degree. This is wave 4 of a higher degree forming around the same vicinity. Just watch out for a bearish reversal if you are wanting to trade in a conservative manner. But crude selling on rallies remains on guard with the stop loss about 60 to 50 levels. Alright, so let's bring this session to a pause now, and watch out for those two services that should be starting 4th of January. There will be 2 Telegram channels and 1 YouTube channel, but with a different playlist, with a Hindi playlist videos over there. all right, so that you can distinguish easily and it doesn't get mixed up. All right, so once again, thank you for joining me online, and again, thank you for liking and thank you for spreading the word. And if you're not yet subscribed to YouTube, kindly do so. That adds to a lot of numbers and a lot of value to our channel as well. So, not subscribed, please do so. That will be a one way of communicating in future as well. And don't forget to spread word, because the family has grown fast, but we would like to grow even faster in 2018. Alright, so stay tuned for the next session. New York Live coming up at 8 a.m., followed by the educational series or discussion at 9 a.m. We are going to discuss about trends today. Alright, so until then, good luck to your trades, and take care and God bless, brothers and sisters. Goodbye.